How's it going, everyone, and welcome back to another stock market video. For this one, going over the company RH. Today indicated the company's earning conference in which they beat the estimated EPS. So the predicted EPS was 47 cents. While the actual EPS is 0.65 cents. So there's a very large difference, and I guess the analysts weren't able to predict the overall revenue for this company. Currently, it's trading on a 1.21 million volume from its average volume of 2.15, so this may indicate that it may break out even further going into tomorrow or the upcoming weeks, back to its original resistances at around $100 price per share. So here we're looking at this stock as a consistent support levels, which is demonstrated around the $44 range, and it's been consistently hitting this for past couple of months, with some very slight upswings and followed by a downswing. Recently though, from here, so this past year, it's been on a slight rise. As we can see here, it's been kind of uptrending a little bit slightly. It's showing a new support levels a little higher from the 44 to 46 range, and it's a twice here, or a few times within that window. It breaks through to resistance at $50, and the new support levels a little higher at $47. And with this, and just in today's earnings conference, demonstrated over a 35% growth in the aftermarket, as the company beat the estimated EPS. The future outlook for this stock looks to have a lot of potential. I'm reading an article here by Dan Kaplinger. So basically what this company does is it's a home furnishing retailer, and it's basically in the housing markets, providing I guess remodeling homes, furniture, and all that stuff. So it has a very interesting, profitable business model, because everyone needs a home, and everyone needs better furnishing for other businesses such as like real estate, or even fixing your own home, and all that jazz. So recently, within the past couple of months, has demonstrated to be a somewhat of a volatile market. It has lost momentum the last couple of years, but it has regained it. So since the estimated EPS was priced at $47.47 per share, and now it's at 67 cents, Um, many of the shareholders are concerned about this company's future, whether or not it will be a growth stock or a short sale stock. Very hard to determine that, but this second quarter financial report demonstrated that they are progressing and taking on future business initiatives from other companies as well. So also with the results were very strong today closing, and many people think it has a very positive outlook going forward now. The overall revenue rose by 13% to 615 million, and it outpaced the forecast growth between 11 to 12%. So that's very good news. However, this company posted a net loss on a GAAP basis, but adjusted net income to 19.7 million, which was higher by about 10% from the levels from a year ago. This company also naturally, like most earnings winners, is taking more moves forward. Currently, they're using a model where they reduce their inventory to gain higher profit margins. However, one thing to take note about this company is the fact that it is a retailer, and then maybe just the whole retail sector has been in quite a shamble, and this quarter and the previous quarters with the just with the looks of how online retailers are doing right now, and maybe this may transition into that market, but it's quite uncertain at the moment. But they definitely came back with this huge growth in the aftermarket EPS. Overall, though, it's still down by a few bucks. We look at the year to date here. It's past year at from June. It's been showing consistent support levels around $40. This is where it's been within this margin from 40 to 60. This graph doesn't show the overall earnings winners growth, so it's at around $70. So it may there's a good possibility that it may hit the previous resistance at the $80 range before it took quite a dip. So this may be a good swing trading stock here. Currently the volume's very low, as you can see. It showed it's demonstrated one couple of volume spikes, one in December 2016, one in March, and another one in June. So it's about like every 3 months where it shows huge volume, which drives up the shares on the long side here. So by this indication, maybe, well, September this month, so since it's been consistently showing an uptrend every 3 years. 3 months. This is a good month where it maybe presents that same pattern again, upswing. Once again, it's not for certain whether or not that will happen. It may even drop back down to this support level at the $40 to $41 range. But I would say going into it right now would be quite speculation, as we can't really determine the risk versus reward. If we were going in it from the $49 from the closing, we can say our risk levels would only be what, risk level for a 20% loss, which is quite big, but then we may profit up to 35%. So it's basically, are you okay with losing 25% of what you bought into the shares? Or yeah, is it worth the risk? Worth risking 20% of it versus the 35% potential to profit? So those are the key factors that I kind of look into going day trading a stock. If we look at the relative strength index levels, RSI levels, we see that it's on the underbought side, but again, at the same time, this chart doesn't show the overall what it is currently in the market, so I predict it should be a little higher, maybe around these ranges on the little overbought side right now. It may dip, I would predict. I would say it'll be a great buy in the $50 range to $40 to $50 range. I would say is a good buy, and may jump back up to the 80s in a couple of weeks or even a month. I would say that's a very interesting opportunity that may be worth looking into, and just overall keeping on your guys' watch list on how this stock plays out going into the future. We look at the overall and the 3-year window, we can see that it's consistently been trading in the upper range of $80 to $100 range. And this was back when the housing market crashed, I believe, and it's been and it was restabilizing due to the depression or the recession from 2008. So for a couple of years, it's been on a consistent higher margin trading levels from the $80 to $100 range. The highest breakthrough it's presented was at 106.50, and it may gap back up to this level here potentially, right? So even if we were to get into the stock at the $69 range right now, there's a potential 50% more margin to profit from this stock. I haven't read up on the SEC filings and the overall the reports that this company has shared, which I would say would be a good idea if you guys were to invest or trade into this company. So yeah, those are the indicators that I would look at, and if the EPS from back then matches to what it was today, then I would say there's a very strong possibility that it could gap back up to this initial resistance levels to the hundreds. And as we can see here, it's been consistently hitting this resistance at the 107 just about 2 to 3 years ago. Yeah. The lowest support level is shown to be at 24. So if you guys are really unsure about the future market of the stock, you may even want to wait until it's closer within this range here from 24 to 38 would be a very safe opportunity to get into the stock. If you're an investor, you can wait until it drops to these levels, if it ever does, and then just bag hold it back until it hits to maybe the 40s, 60s, or even maybe to this initial resistance at 107. That would be like over a couple thousand% profits, potential profits for the stock. So yeah, that's basically my thoughts on this company. I'm not really sold on the idea of buying into this yet with the earnings call. Maybe I'll wait for a gap down and swing trade it, but I'm always looking for other stocks on my watch list. Currently the volume's on the lower side right here. Right, it's like third lowest. That's on my watch list, only at 4 million. So maybe if the pattern continues, then the volume will spike up within this month and show to gap back up to the initial resistance levels. Gap back up to the initial resistance levels at 100s. So essentially there's still a $30 margin for profit if the pattern does continue and it trades at a higher volume going into the next couple of weeks. So yeah, that was my analysis of the Restoration Hardware Company, ticker RH. If you guys thought this video was helpful, please leave a like, comment, subscribe, and I'll see you all on the next one. Thank you all for joining me, and happy trading, y'all.